Hello students, thanks for clicking this video. In this video we are going to learn about different types of errors. It is chapter 6, trial balance and rectification of errors. Come, let's discuss about classification of errors or types of errors. Keeping in view the nature of errors, all the errors can be classified into the following 4 categories. All the errors can be classified in 4 categories. What are those 4 categories? Errors of commission, errors of omission, errors of principle and compensating errors. 4 types of errors are there. First one is errors of commission, second one is errors of omission, third one is errors of principle and fourth one is compensating errors. We are going to discuss about these 4 different kinds of errors in detail. Come, let's discuss. These are the errors which are committed due to wrong posting of the transactions. Wrong posting. Where we will do posting usually? Ledger, isn't it? Journal, we will do journalizing. From journal to ledger, we will do posting. All the transactions have special account, individual account called ledger. So from journal to ledger, we will do posting. While we do posting, some errors may occur. Wrong totaling or balancing of the accounts. Wrong totaling. Trial balance. Trial balance, which is called TB. Particulars, debit column, credit column. While we do calculation, finally we may leave some arithmetical errors. All the transactions in debit side will be added, at the same time credit side will be added, isn't it? Finally these both the columns should be tallied, isn't it? So if we leave errors, if we leave mistakes while we do calculations in this account. A wrong costing of the subsidiary books. Subsidiary books. Which books are very helpful to prepare an account, that is called subsidiary books. Purchase book, purchase written book, sales written book, and so many subsidiary books also we have studied. Wrong recording of the amount in the books of original entry. Wrong recording of the amount in the books of original entry means original entry is journal, isn't it? Original entry is journal. There, if we recorded wrong amount in debit side or credit side, that also leads for errors of commission. Errors of commission. For your better understanding, I have an example. Rajhan traders paid rupees 25,000 to Preetpal traders. Actually, we are Rajhan traders. We paid amount 25,000 to Preetpal traders because Preetpal trader is the supplier of goods. They are supplying the goods to us. We are paying money to the Preetpal. So amount rupees 25,000 we paid to Preetpal traders. This transactions was correctly recorded in cash book. In cash book payment side, we have recorded correctly. But while posting to the ledger, Preetpal's account was debited with 2,500 only. 10 we leave mistakes. Instead of writing 25,000, we recorded only 2,500 rupees. This constitutes an errors of commission. Such an error by definition is of clerical nature and most of the errors of commission affect in the trial balance. So most of these kind of errors are affecting trial balance. The journal entry for it, we are Rajhans. Rajhan paid amount 25,000 to Preetpal trader. Preetpal is a supplier of goods, isn't it? So money goes outside. Directly we will enter in the journal entry Preetpal account debtor to cash, because we paid cash money how much? 25,000 rupees, isn't it? 30. And instead of writing 25,000 in the debit column in Preetpal account, we written only 2,500 rupees. 2,500 rupees. So we fails to write one more zero. Only 2 zeros we have written over here. It is errors of commission. Definitely this error will affect trial balance. And second one is errors of omission. The error of omission may be committed at the time of recording the transactions in the book of original entry while posting to the ledger. There can be 2 types. Errors of complete omission, errors of partial omission. When the transaction is completely omitted from recording in the books of original record, it is an error of complete omission. For example, credit sales to Mohan 10,000 rupees not entered in the sales book. When the recording of transaction is partially omitted from the books, partially omitted in the books, it is an error of partial omission. It is a partial omission. The above example, credit sales had been duly recorded in the sales book, but the posting from sales book to Mohan's account has not been made. It would be an error of partial omission. It would be an error of partial omission. Errors of omission. The errors of omission may be committed at the time of recording the transaction in the book of original entry. When it will be committed? At the time of original entry while posting into the ledger. So first one is while we do journalizing. Next one is while we do posting. In these two situations, these errors of omission may occur. Isn't it? So there can be two types of omissions. One is complete omission and second one is partial omission. What is complete omission? Completely we leave that. Completely we did not write. Partial means debit side we have written, credit side we fails to write. Else credit side we written, debit side we fails to write. When a transaction is completely omitted from recording in the books of original record, it is an error of complete omission. When a transaction is completely omitted, we fails to enter that transaction entirely means it is complete omission. For an example, credit sales to Mohan rupees 10,000 not entered in the sales book. What is sales book? All the credit sales will be recorded in sales book. What is purchase book? All the credit purchases will be recorded, not cash purchases. So here, as soon as we offered 10,000 rupees worthable product to the Mohan party, because he fails to give instant money to the product, it is a credit sales. So this should be recorded in sales book, but we fail to record 10,000 rupees for Mohan in sales book. So it is complete omission. When the recording of transaction is partially omitted from the books, it is an error of partial omission. It is an error of partial omission. If in the above example, credit sales had been duly recorded in the sales book, it is successfully recorded in sales book, but posting from sales book to Mohan's account has not been made, which means instantly while we offer credit sales to Mr. Mohan, 10,000 rupees are recorded in our sales book. It is a credit sales transactions, so we have recorded in our sales book, but we fails to record in a ledger called from subsidiary, which is called from ledger journal to ledger. While we do posting, we leave the mistake. What mistake? We fails to record the 10,000 rupees for Mohan's account. It is a credit sales. We fails to record it. It would be an error of partial omission. How it will be treated as partial omission? Because it is entered in sales book, but that same transaction is fails to enter in Mohan's account. Every debit have this corresponding credit. So this would be debited to Mohan's account, isn't it? So Mohan is responsible to pay 10,000 rupees to us. Can you get my point? In this situation, Mohan fails to pay 10,000 rupees, so it is a credit sales. So we recorded in sales book, but we fails to record in Mohan's account. Isn't it? Errors of principle. Errors of principles. Accounting entries are recorded as per the generally accepted accounting principles. So accounting entries will be recorded as per the generally accepted accounting principle. You know, GAAP, generally accepted accounting principles. As per that only all the accounting will be recorded. You know that basic rules, golden rules, personal account and impersonal account, real account and nominal account, you know that, right? And if any of these principles are violated or ignored, errors resulting from such violation are known as errors of principles. If any of the errors is violating the rules and regulations of this GAAP, that is errors of principles. An error of principle may occur due to incorrect classification of expenditure or receipt between capital and revenue. This is very important because it will have an impact on financial statements. it may lead to under or overstating of income or assets or liabilities, etc. So you know very well about capital expenditure and revenue expenditure. Instead of writing capital expenditure in revenue expenditure, that is errors of principle. Principles already prefixed by AAA, GAAP, AICPA. You know what is AICPA and AAA? Generally accepted accounting principle is accepted all over the world, all the nations. If any transaction is violating the rules and regulation, that is errors of principles. Errors of principles. So usually we people will do mistakes. Capital and revenue expenditure. Purchasing machinery is capital. Instead of that, if you have written that purchased machinery in a maintenance account, that is revenue expenditure. Isn't it? That is great mistake. For your better understanding, I have some example. Amount spent in addition to the building should be treated as capital expenditure and must be debited to the assets account because we spend for building purpose, isn't it? Building is the fixed assets, so it is a capital expenditure. We should be treated this where it should be debited in assets account. Instead, if this amount is debited to maintenance and repairs account, it has been treated as a revenue expenditure. When capital expenditure is treated as a revenue expenditure, that is a great mistake. That is errors of principle. Can you get my point? It has been treated as revenue expenditure. This is an error of principle. Similarly, if a credit purchase of machinery is recorded in purchase book, what we will enter? All credit purchases will be entered, isn't it? But except fixed assets. If you are purchasing machinery, that is machinery is a fixed assets, it's a capital expenditure. Instead of writing in journal proper, if you have written in purchase book, that is errors of principle. Can you get my point? Similarly, rent paid to landlord also will not enter in the cash book, isn't it? So this kind of errors will not affect trial balance. Anyway, it is violating rules and regulations. So it is errors of principles. When two or more errors are committed in such a way that the net effect of these errors on the debit and credit of the account is nil. Such errors are called compensating errors. Such errors do not affect tallying the trial balance. For example, if purchase book has been overcost by rupees 10,000, resulting in the excess of debit 10,000 rupees in purchase account, and sales return book is undercost by rupees 10,000, resulting in short debit to sales return account, is a case of two errors compensating each other's effect. One plus is set off by the other minus. The net effect of these two errors is nil, and so they do not affect the agreement of. Okay, it is a trial balance, TB, trial balance, debit side and credit side. Particulars, debit, credit. It is TB, trial balance. So here we will write purchases. Purchase amount, actual amount is only 1 lakh. For an example only I am giving for your better understanding. Actual amount should be entered only 1 lakh rupees in purchases, debit side of this trial balance. Instead of writing 1 lakh, I have written 1 lakh and 10,000 rupees. At the same time, here sales return is only 90,000. Instead of writing 90,000, I written 80,000. 80,000. So if you take this purchase account, it is overcosted by 10,000 rupees, and if you take sales account, it is undercosted by 10,000 rupees. Isn't it? So here 10,000 is increased, here 10,000 is decreased. Anyway, if you are adding all the amount in debit side, at the same time, if you are adding all the amounts in credit side, it will show equal balances. This error will not affect trial balance, because 10,000 plus 10,000 minus, then it will equalize. isn't it? So these kind of errors will not affect trial balance. It is a compensating error. One error is compensating another one error. Can you get my point? It is compensating error, and previous error is errors of principles. Generally accepted accounting principles. If the transaction is not following the golden rules, that is errors of principle. And next one is errors of omission. Partly omission and fully omission, completely omission. Completely omission means we fails to enter completely, which is the subsidiary book and even the transferring entry to the ledger or in trial balances also. But partial entry, partial omission means we entered in one account but we fails to enter in another one account. That is partial omission. Definitely this will affect trial balance. This will affect trial balance. And next one, errors of commission. Errors of commission listens. We committed in errors. Instead of writing 1000 rupees, they written 10,000 rupees like this. It is errors of commission. I hope you understood. These all the 4 errors. Errors of commission, errors of omission. In errors of omission, completely omission and partial omission. And errors of principles and errors of compensating errors. I hope you enjoyed this video. Stay tuned to watch next videos, and you don't forget to watch our previous videos for your better understanding. Thank you. Thanks a lot.